This is Christian Farmer, Strategic Trader Group, and this is your end of day market recap for Tuesday, February 17th. Risk disclaimer in front of you. Everything that we're going through in these videos is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So quiet start to the week. Look like the markets just kind of start the day. We're pretty decently under pressure. The VIX cranked up to about a 23 in the first hour. And then we kind of came back, and SPY closed for the day in positive, I believe, in positive territory. Didn't feel like it, but it did. Up 0.2 of a percentage point. The Qs were just down. IWM really came back from the lows, had a nice reversal, and IWM closed essentially flat. Bonds were up a little bit today, up about 0.2 of a percentage point. Bitcoin, gold, silver, all of those, all the commodities were down pretty decently. The VIX was down 4% on the day. Again, kind of shocking considering that that the VIX hit about a 23 and then closed right around like a 2030. So to me, that indicates that there's still a decent level of volatility in the market. We're kind of staying around a 20. And we're also just continuing to kind of bounce around the lows of the range. Let me just bring up the SPY chart here. Here we are again. We're right around the lows here. We are not in a kind of a little bit of what I went over in the weekend member for the weekend video that I put out for members, is that we're just not, the indices are not really in a position of strength here. SPY, of course, market cap weighted. The bigger companies have been seeing distribution, and we're just kind of hanging around this lower end of the range. For now, we keep bouncing on it. We're kind of starting to expand a little bit in this range, but we keep coming down to around the lows of this range and we bounce. The issue is that we're not really doing much else than that right now. We are still below the 50-day moving average. We're also below the value area for the month of February, which again is not in a position of strength. Looking at just the smaller time frame, notice that like the bounce that we got today, really kind of weird when you look at the tick index. Something that I was kind of looking at today, we kept on going from like a negative 1,000 to over 1,000, which is unusual to see something like that. The breath was very poor this morning. So it just, to me, it just is very whippy and not a lot of conviction. When we snap back like that, like with that tick index, usually what we see is when we get to like a negative 1,000, we're usually going to bounce from there, and a positive 1,000 is usually a bit extreme. But if we hit those like several times within a couple hours, it just doesn't look like there's any conviction in the market whatsoever. I know that's a little bit counterintuitive, but I usually look for signals using that, and just note that when we show minus 1,000 and plus 1,000, minus 1,000, it just means kind of like an erratic type market. However, we know exactly where our resistance is, and that's at 684.75 in SPY. That's the bottom of the value area for the week. That's where we got to, like right around the middle of the day, and could not get any further than that. So, we've been making again. This is a tough market overall. Tough technicals, I would say, a little bit. Since the middle of last week, we've been making lower highs. Right here was your high on Wednesday, where we tried to go higher and failed. Then we tried again, failed. Then I think this was on Friday. We tried to rally a little bit in the middle until the middle of the day, failed once again. So there's just not any major conviction in this market. Again, the rally today looked pretty good from the lows, but then it doesn't really go anywhere. Where you get like a couple hour bounce, so if you're kind of like if you're at the point where you can't turn around your portfolio like every 10 minutes with these turns. You kind of just sit things out a little bit. And then when you sit things out, you're like, oh, look at the market's bouncing. Maybe there's some reversal going on. And if you just kind of sit on your hands a little bit, you kind of see that you're right. With your first thought is to really not get too involved with this market right now. It's just not giving us any really meaningful signals, I would say. And the best thing that you can do in this, and here's the cues, by the way, which is also didn't quite get to the bottom of the value area for the week, but still making another lower high. And again, this is in a more precarious position at this point. We got right to that like top. By the way, this did not take out the lows of the fifth. We actually went lower than that pre-market. Reminder that when you're looking at the ETFs, they're not going to show you the pre-market activity. But again, we're sitting here right on the lows, and maybe at this point, wearing people out a little bit because we're not breaking. I think probably half traders at this point would want to spill lower just to kind of break things up a little bit and to get some of that complacency out of the market. But for now, we're kind of just hanging in there, and 592.67 is the level to watch there. And then there's IWM. So as I mentioned, nice reversal from the lows. Just to break this down on the 5-minute chart here, but here was the low. This was a decent move lower, and then we just kind of just reversed and held the lows from, I think that's Thursday maybe of last week, and bounced right back up. And again, the high of the day was somewhere in the early afternoon, and then we don't have any power or conviction to really do much more than that. And IWM continues to kind of just mind its own business because it looks different than SPY and the Qs, and just stays right in the middle of the value area. Just to look at a couple other charts at this point, I thought that the precious metals, again, I went over this in the weekend video. I wouldn't be surprised, and I think I kind of want to get back into gold at some point. I'm not in it right now. I tried it last week and got out of it really quickly, but I'm almost thinking that we need to kind of come down and retest that 50-day moving average in gold. This was down 3% for the day. Again, not a lot of things are just breaking out or showing like great opportunities. I was talking to I had a nice conversation interview with Helene Meisler, which you can catch on my YouTube channel, and we did that at 12 o'clock today, and we were just talking about different things going on, and we talked about software, and we talked a little bit about what this market's been doing for the last 3 months for overall SPY. That means basically nothing, but other areas acted pretty well until about a couple weeks ago. And then it's just really tough to find good setups. You're seeing things that look good for like an hour or two, and then they don't look good, or maybe a day or two. In this sense, looks like gold was trying to go higher. It just looked like gold wasn't ready yet. And that level up there of resistance is right around 470. And we could do the same thing. We could also kind of look at silver. Silver looks worse, but this one already is below the 50. And look at this thing, gave back at this point again all of those gains from this big monster move up. So again, probably just in consolidation. Just to kind of go over, because again, these things change quickly. Remember, copper was the last one to try to go that leg higher, and now is sitting on the lower end of the range. Doesn't look particularly good. First closed below the 50-day moving average. So we could go through a couple sectors here, but I would say this too. Just looking at my spreadsheet here just for a second, what I thought was interesting today was that growth actually outperformed value today, which is a little bit different. There's a little bit more life to some of the growth areas. Consumer staples, which everybody seems enamored with, was down big today, down 1.5% today. So that, and a few of the other areas in value, like energy, did not have a particularly good day. I think that energy is very tough here because I think part of the reason why energy and crude have gone up a little bit recently is because of the situation going on in the Middle East with Iran, and we don't know how that's going to work. And if you've traded, if you've been around since other Middle East uh, escalations, that once things diffuse, usually crude falls pretty decently. And now on the flip side, when escalation increases, crude usually goes up. But it's a very headline driven market. So I think that you have to kind of be careful about energy pulling back here if the situation I think which everybody is rooting for gets diffused to some extent. Other things, just to kind of go around to some of the other areas, a lot of these they just look like either they're consolidating or they're breaking down a little bit. I think industrials, which finished up a 0.5%, consolidating. A lot of people talking about the financials, they came back today up 1%. Again, very different when you're looking at XLF versus the banking index or the banking ETF, which is KBE. That also bounced today up 0.4 of a percentage point. Again, didn't look like the strongest thing in the world, but didn't look like it didn't break down either last week. That leads us to looking at some of tech. So we went over this. I went over this with Helene earlier, and the one thing that's positive about software is to try to get a positive from this is that it has not taken out the February 5th lows. And it's one of those things where I think we kind of agreed with this, that there's still too many eyes on this. And a great point that she made today was that a lot of stocks are just the charts look very similar. They've all kind of come down pretty decently, and you're not seeing a lot of separation that's going on here. Palo Alto reported after the close today, and I think they're one of the ones that have come up from the lows just a little bit, but they're back down there. Their guidance was not particularly good, and they're all the way down, trading down to 154. So, and you're starting to see, like, I build out an earnings list every quarter, and we've got plenty of names on there, but there's also there's also some pretty, like, not great reactions. Um, let's see, and there's a couple names that are down decently after the close. So I mentioned Palo Alto is down 5.6%. SanDisk announced, I guess, a selling shareholder, which is Western Digital. That stock's down. APLD, um, Nvidia corporate sold Applied Digital, and a few other names. So APLD is down 8%. So there's still, like, feels like there's more landmines out there, especially in tech. So, sometimes you just kind of can get into something or start a position, and all of a sudden you get a headline, and stock drops pretty decently. I was just going to show you how I kind of constructed my watch list for the week. I do that for members every weekend, and as you could see from this, there's just not, I kind of just said, I don't see a ton of setups this weekend. And I kind of just went around to some of the names that acted fairly decently. I have a couple aerospace names on there. Five, which is more of a defensive name, acted well. RVMD. So we could go through a couple of these charts just to kind of show you what I'm looking at. And I usually get to, as I'm getting to the end of these videos, I talk a little bit about what I traded today, which I can certainly do that. I mean, I traded some Apple today. The reason why I did that today is because I like when Apple has an event, when they announce an event, right? It's one of the age old sayings on Wall Street: buy the rumor, sell the news. So when you have an event, I'm not expecting much from the event, but maybe the stock can rally a little bit into the event. The stock was up 3% today. It's also in that realm of the safety play, and I feel like I got a little bit of a dip in it. Do I love this chart here? No, I don't. I don't like this lower high that it put in here last week, but maybe it can rally up a little bit further with that event ahead of it. And then I liked what the Aerospace and Defense Group was doing till about 12 o'clock, 1 o'clock today. This was up 1.4%. And it saw some things rally, but it did turn the corner back above the short-term moving averages. So I'm long this. We'll see if it could break 239.56. But again, I would say, this was I'm just kind of putting out feeler type positions, starter positions, because there's just a lot of things that aren't working, or they look good, for a couple hours, and then they kind of fall apart. So we'll see what this does. And I don't mind giving, a couple trades a shot here and there, but I would be mindful that there's just a lot of things that are kind of failing. And we are in the second half of February, which we know February is not a strong seasonal month. In fact, it's a weak seasonal month. So as we're kind of rounding the corner through the halfway point, the second half is normally weaker than the first half. So how about that for some great news? But it is what it is. I think that I think that this the silver lining here is that we are going through a tougher time right now, but I don't think that this whole year is going to be this tough. I think, as always, when the market is not giving you, we'll go to my baseball analogy. When the market is not giving good pitches, you just try not to swing. You try not to swing at any of the out of the strike zone sliders, and if you're facing a good curveball pitcher who's not pitching the ball over the plate, right? You're not getting a lot of strikes down the middle right now. So what do? You just kind of wait for your own pitch. I'll leave it there, guys. Have a